Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, January 26th. Okay, we had quite a day yesterday, didn't we? We had a little bit of everything. We had a rug pull, we had a recovery, we had short squeezes going on all over the place, GameStop, and about 10 other ones. Really busy day for me. A little bit on the frustrating side. Didn't really capitalize like I should have yesterday. I had a lot of pay for profits and somehow let a lot of that slip through my fingertips. You know, it happens. It's always frustrating when it happens, especially when it happens to you, of course. But that's trading. Tried to take a few lessons out of yesterday. One of those is, when you've got a paper profit, remember, it's just paper, right? It's not yours until you close it out, roll up, roll and protect, the things that I preach all the time. I didn't do it. Or didn't do it to the degree to which I should have with the positions that I had on. So, a lot of these principles you can, memorize, work, regularly do them, but in certain moments of truth, you somehow fail in that execution in that moment. Your base instincts of greed override your trading brain, knowing what you should do versus what you actually do. And yesterday I had a bit of a breakdown on that. So there's always work to do, no matter where you're at in your in your trading process, in your development as a trader. All you can do is realize what you should have been doing, make note of it, and dust yourself off and keep going. Now, today, I'm not going to be thinking about yesterday. I'm going to be thinking about today and the here and now. And of course, that'll be a reminder, all of our collective memories get put into our trading brain. So that mistake will be fresh for a while. And hopefully I'll learn from it, and and you as well. I'll send out notes now and again. Time to roll up. Make sure getting paid in 2021 is part of your plan. Make that be your plan, and then execute around that plan. We're at the top right here in these markets. You know that. Could there be a leg higher? Sure, there could be. We'll see that in the numbers. But also volatility seems to be coming back. So be ready for that. And when you get an abnormal pop, like we saw in, ONEM, ONEM, we had a 12-point move in 2 days. Take some off the table, roll it up, take most of that to the bank, and then stay long in your trade. So that way, if the next day comes or the next 2 days they pull the rug, you're already in the bank, and then you'll feel good about, wow, I'm really glad that I took that profit when the market gave me that opportunity to take it. So, anyways, there's a little lesson for you. I hope you did okay yesterday. And that the rug pull in the morning didn't clip you too badly, and that you handled it psychologically well, emotionally well, and were keying off of the levels instead of looking at the red bars. So let's take a look at it. SPY 2 hour. We started right here around 383, and started the morning relatively strong. We went up here, and notice where we topped out. We topped out at 384.77, basically right here at the top. I've got the line here at 385, and then mid-morning, they really pulled the rug. And I never even looked if there was a catalyst or not a catalyst. I just viewed it as a liquidation break, a sell-off for no reason. The reasons don't matter in the end anyways. But look at where it went. Came right down here, sliced right through this open gap, and stopped on a dime at the channel low and at key support right here, right around 378. Now, we had that scenario dead to rights. If you go back and look at or listen to yesterday's video, we talked about a downside scenario where this gap filled, this channel line was hit right around 378. We said we wanted to be buyers there as long as that held. And if you did that and you had your wits about you, you did great. And if you did that, kudos to you, because that was the right trade to make. But you only had a minute or two. You didn't have a lot of time to think about it. So that would have had to be part of your plan going in, or chances are you would have been flustered there or not know what to do right in that moment of truth at support after this move. Now, I want to talk about something else here while I got the chance. Let's just finish up here, and then I'll go on. I'll talk about that on the 30-minute chart. So here today, the game plan is exactly the same because we were basically unchanged, 0.4%. A breakout above 385 is a level to buy with a stop just below. Become more cautious below 383. That would favor a move down to 381, and below 381, probably back down into this 379.50, 378 area. So the layout and the levels are exactly the same as they were yesterday. So here's the 30-minute chart of SPY, and here was the touch of the top end of the range, followed by a big liquidation break right on down. Now, normally, what I say is that when you come into a gap, you're usually going to get a bounce, at least on the initial move, on the initial run to the gap. You're going to get a bounce at the top of the gap, and then it comes down. It has a little baby bounce and comes down and fills it. Okay? That's not what happened yesterday. There was so much momentum behind this sell-off that it just blew through the gap and then went down, went ahead and filled it. And then down at key support, you got the bounce. And then you got the big V right out of the hole, back up to the top of the gap, and then on up. Now, let's talk about active trading. So, let's just say you were caught unawares of this liquidation, and let's just say you weren't even in it, or if you were long, if you tried to front run this signal. And you were long, hopefully somewhere early in this bar, you figured out you were wrong and you got out. So it comes down here, and let's say you were knocked off center for a moment and you didn't take this trade at 378. Let's look at the rest of the day. You get the bounce. When you recaptured 381, this well-defined level that we've had on the board for a month, that was a level to buy. Remember, recapturing a key level from below is a chance to buy. If you bought that, you had this red follow-up bar, but you never got taken out. It never dropped below 381. And then in the following bar, you got a nice bar. You got a $2 bar from 381 to 383, right? 383 was yet another level to buy. The midpoint of the range, you could have bought that, and then you finished up with $1.50 lift into the close. So I think the point here is, if you recognize you missed an opportunity, oh man, look, there was a V recovery there. I could have bought that. What a dummy. Refrain from doing that, from beating yourself up, and look for the next opportunity. And that next opportunity came at 381. Had you bought there, you were good for 350. And that's a nice trade in itself. That's a nice move, right? So it's easier said than done. I realize that. I told you that, I had my own problems yesterday. But look ahead to the next opportunity. Don't get hung up on the last mistake or the last level you could have bought at, and buy or sell at the next opportunity, right? So, anyhow, 385 is your pivot. Also, overnight, the ES, large cap futures, were off about 26 handles. And as I started the video at around 7 a.m., that had all been recovered, and ES was marginally green, a few handles. What you always want to do pre-market is mark that pre-market low, right? You'll see it on your platform on pre-market trading. Go down there and set yourself a level at the overnight low. Why? Because oftentimes, not always, but oftentimes, that level will be found during the regular session as a double check, right? So have that marked, and in the back of your mind, if you start seeing, price roll over, and I think that level was down around 382, if I'm not mistaken, somewhere in there. If you see price start rolling over, that will be a reference point for you, right? And then if it breaks the pre-market low, what you should be saying to yourself is, we're going lower, and it's not outside the realm of possibility, in the days ahead, that we come back and double check this tag at 378.50 or wherever it was. Yeah, 378.50. So keep that in your mind. Those are two levels to watch, the overnight low and the low of yesterday, as two key levels. And if we lose yesterday's low, then you've got to no doubt about it, we're in a get short scenario if we lose this 378, then we'll be down in the 374s and possibly even lower if a larger correction starts to unfold. Okay, spent a lot of time there. I hope it was worth it. Qs 2 hour. We got the rug pull, then the recovery back above trend line. That's bullish. And I was looking, where did this thing stop? Where did it stop? It was out in space. I was expecting, when I was looking at it, why didn't that come down and at least touch the top of this gap and top the midpoint of the channel? And I went back and looked, and that was a perfect tag of the 8 EMA on the daily chart. So, and that's something that I am not good with, carrying forward into these lower time frames the key levels off the daily chart. And I recommend that's something that you do, because if you had that marked, where is the 8? Where is the 20? Those are natural support points on price moves. So that's that. And here's the big rug pull. Looking at the morning again on the 30-minute chart, you had that opening candle, and the opening candle low, give or take, was 329. You can set an alarm there. You can set a level there. We talked about the gap up and the potential for a flash gap fill. Well, we got the flash, but it wasn't out of the gate, right? They ran it up a little bit first. Then they filled the gap. So if you had 329 alarmed and marked and had been saying to yourself, you know what, if we enter the gap, 90% chance that's going to fill. So that would have been an area where you could have gotten short and come back down to this 325 area. That would have been your gap fill. And then there was that one big follow-up flush bar that they bought right back up and then back up. And just like on SPY, your chance to buy was right here at this 325 level, and then that would have been good for $3 on the way up if you had bought the recapture of this prior trading range. IWM, big wide range bar here, up high, down low, came back to finish almost flat. Today, the guidance is exactly the same. 215 is your level. Above 215 you can buy with a stop below, but 215 is your resistance now. See all the locations? 1, 2, 3, 4, 5, 6, 7, 8, 9 candles have been pinned under 215. So you got to take that out. And that's certainly a place if you want to try a short against 215. If it looks like it can't take it out, then you've got the opportunity for a roll down to 210 again to back test the low from over here. That's a well-defined level as well, 210. Here's the 30-minute candles. Not much to make out of this. There's 215 resistance. Here's 212.50 here as a support level on the way down, and then 210 is the full move back to these lows across here. Facebook, choppy day, came down, undercut 274, back up. Facebook reports tomorrow after the bell. I think your pivot is 280. If it takes 280 out today on some kind of pre-earnings run, get long with your first target being 284, or it may just oscillate here today, maybe drift back down. You'll just have to play that by ear. But right here in the middle of the range, hard to take a position. You don't really have much to shoot against. Apple had a nice day. They also report yesterday. They report tomorrow after the bell. If you recall from yesterday's video, we talked about buy that back test of 138, and you wouldn't have thought you'd have had that opportunity after the big gap up, but you did. And if you had your wits about you, once price pulled in, undercut this 138 level, your buy was on the way back up, right? Undercut support, recapture support at 138, and if you did that, you had about $5 to the good. So that was a great trade if you took it. Now the way I've got this set up going forward, it's as a bracket trade, right? Here's the range. Below 141, you're probably coming back to 138. If it takes out 145, another leg higher. So there's also this $4 range within the box. If price dribbles down to 141 and holds, you can take a long there with a stop just below, and then your target becomes the top of the box, right? So this will be a pre-earnings setup into tomorrow afternoon. So we'll see if the bulls, maintain control and want to run it higher into the print. That would be one to watch today. Tesla had a good day yesterday. Had the fake breakout, right? Breakout. I'm sure that sucked a lot of people in. If I would have been, focused on this and trading this, I would have bought this candle on the breakout, and then, on the reversal, back into the range. That would have been a place where you got to get out if you had been sucked into this long. And then it goes down. Your buy would be on the recapture of this bottom of this gap, where all these candles had found resistance on the way back up. And if you did that, you had 854 to 880. What is that? $25. That's a nice trade. Now today, Tesla reports after the bell tomorrow as well with the other ones. Above 880, I think you can be a buyer if there's going to be a run into earnings, but I wouldn't front run it. Wait for that breakout, take it, and then trail your stop up, if it starts to run. I think that could potentially be a nice trade for today and tomorrow. Microsoft, exact same setup as yesterday. There was this intraday volatility. You would have had a chance to buy this recapture of 226, and that would have been good for $4. But as it stands now, got to see the breakout above 230. Got to see the breakout above 230, and if that can happen, there's room to run. Amazon did a whole bunch of jacking around, head fake breakout, rug pull all the way back, and then settled back at unchanged at the end of the day. Again, no difference in the setup. This 330 area is your toggle point, your pivot point. Above, I think you can be long, looking for 3340 or higher. But if it sinks below, probably coming back to 3250. They report next week on February 2nd, along with Google, which is right here, reach up to the top of the box, immediately back down below, found support here, then reclaimed this 1880, and to finish up at 1900. 1900 your pivot. If you get a break above, your target is 1930, top of the box. And if it stays pinned below, I wouldn't be interested in trying to, put on some big short with Google. I think it's one of the strongest of all the FANG names in the setup. I think it's going higher. Look for long entries instead of short entries. Yesterday was all volatility. It wasn't, something happened to Google. It was just, it got caught up in the market and, sold off. But I still think this is a big bull flag, and I'm looking for a breakout above 1930 to head towards that measured move target of 2200. Netflix undercut this. What am I trying to say? Undercut the top of the gap, which is fairly unusual in itself. Usually if you enter into this gap, that's the trigger to, get short. And if you did, then that was a frustrating trade. I wasn't messing with it yesterday. But now, above this 556, I think you can be long against the low of yesterday, or where these candles were, which is right about, let's say 554. So you'd have $2 of risk for all this potential upside. If the market holds together, I think Netflix goes higher after this big impulsive move. But like we talked about, there may be some time and consolidation here to digest the big move before the next leg higher. And a lot will depend on, general market conditions. I want to take a look at a couple semiconductor stocks. AMD reports tomorrow after the bell. It's been in consolidation here between 90 and 97.5. I kind of doubt you'll see a pre-earnings run. I think it'll probably stay trapped in this box for the next, day and a half into earnings. And then after earnings, there may be enough horsepower to pop it and then, open the door to the next leg higher above this consolidation range. But you've got a nice trend line here coming off of these lows here around 87.50. That's a nice line to shoot against. If for some reason, earnings are either a disaster or the reaction is a disaster, you want to key off of 87, the zone 87.50 to 90. That's where this trend line comes in, and the 50 EMA. If you lost that, I would think you could be short for a look towards the 200 down here at these lows. They coincide with the 200 down at 75. I'm not expecting that. I'm just saying from a technical perspective, if price moved below this consolidation range, which is $7.50, if you drop down below, the technical target would be 7.5 lower from 90, which puts you down, at 83, but there's no real technical support there. So then you're looking at these lows and the 200. And if it went down that far to 80 or 82, I think it'll just come down $5 more and tag the 200. Oh, and I wanted to show you something else that I don't often discuss in these videos is my relative strength studies. So in my first panel here, this is AMD versus SPY. It's a ratio chart. And you can see by this flat profile that means AMD is trading in line with SPY. If this were rising, it would be outperforming, and if it were falling, it would be underperforming SPY. So, next panel, industry group versus SPY. So this is all semiconductors versus the market. And you can see a nice rising trend letting you know that the semiconductor group is a strong group. Now, the next one's important. The stock versus the industry group. What do we see? We see a declining profile. What does that mean? AMD is underperforming the group, right? And you can see, when we go back to look at price, price more or less from August till now, for all intents and purposes, has been on the flat side. There was a massive advance, consolidation, a little bit of a ramp higher, more consolidation. So from a relative strength standpoint, if you were bird dogging, hey, I want exposure in semiconductors, where should I look for that outperformance? If that was your goal, you wouldn't want to select AMD because this panel tells you that it's underperforming, right? Now, that doesn't mean you abandon it. You still set your alarm here at 97.50 because if they have an explosive earnings, then you could get that big leg of outperformance going forward. So, what I like to do on these panels is, I would probably adjust this a little bit. I wasn't being very precise, but I draw a trend line across the peaks, right? Just like you would on a price chart. And then when you get the relative strength breakout, when this drives above your downtrend line, then the door is open for outperformance on a relative basis. So consider incorporating some of that stuff into your own analysis. Texas Instruments, nice upward trend. I've dropped in a midpoint line here. You can see that this midpoint line, support, 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 support. Then it dropped below, came up for another look, but back below, and then below the midpoint, below the midpoint, below the midpoint, below the midpoint. So after earnings tomorrow night, if you got a move above the midpoint, then there's a chance that it'll stay on the top half of this channel for a while, and then you can use the midpoint as your support line. But nice looking chart. I mean, I wouldn't have minded being in it from 90 to 185. It's a nice move. This is a stock that I took a small position in yesterday. Nokia, a massive amount of call volume on the option chain yesterday on this gap up. I have no idea, what the news was about, but I got some $4.50 calls into February. Maybe get a breakout here. But if you're not in it, set this up as a bracket trade, right? Follow price either above or below the bracket. You've got a nice big gap down here that needs to be filled. And up here, if it pops $5.10, who knows where it might go. So I don't think you're going to get rich on Nokia, but it may turn out to be a nice trade. And given that, there was like $5 million in call premium bought yesterday, there's at least a few big players that think it's going higher. So I just followed that in a small way and see what happens. But this is a prime bracket setup if you want to follow the name. Now, speaking of bracket setups, as we get into the teeth of earnings, you're going to see a lot of gap ups and gap downs that sets up really well for these bracket trades going forward. So I can't get to them all, but I will be sorting after the bell to look for gaps higher and gaps lower. You can do the same. That's a simple sort on most of your platforms. If you want to do that, there are, it often sets up some great second day plays, into those gaps, or even, going lower or higher out of the bracket based on those earnings results and then follow up. So if you're not familiar with gap trades or bracket trades, there's a YouTube video on it. I believe the playlist is Trade School. Also, if you go to the blog site and look under trading tips and tricks, Trade School, there's an article on bracket trades that will bring you up to speed on that trading technique. All right, let's wrap it up here. If you're new to the channel, please subscribe. If you like the content, hit the alarm bell and you'll get everything I publish each and every day, a lot of times midday. Jump over to the show notes and you can register for all my content. That way you'll get an invite to our trading room, which is becoming more and more vibrant and active. Be great to have you there. And also links to the blog site where you can look at the articles like I just talked about. A lot of skill building stuff there, along with quite a number of trading psychology articles. So that's where we stand today. Remember, the FOMC meeting starts today and heads into tomorrow, where there'll be an announcement at 2 p.m. on the rate announcement, and then the presser by Jay Powell at 2:30. And the market dynamic that is often the case is you get a drift higher into that 2 p.m. print tomorrow, and then the volatility comes after that. So be ready for that. Hope you have a good day of trading. Keep your head on a swivel. Keep yourself emotionally balanced, no matter if these red bars come or they don't come. Have your game plan in front of you, because just like yesterday, the game plan in your head gets cloudy very quickly, and it's best to have it written down on what you want to do and where, because when the shit hits the fan, you forget. And it's nice to refer to, a short set of crib notes. I want to be a buyer here. I want to be a seller there, etc. So when those bars come, you're ready to pull the trigger and you know exactly what you want to do. And you're not, like I said, knocked off center. And your trading will improve dramatically if you do that. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.